It is another Thank God Friday to the start of the weekend, everyone. I am Melissa Enoch here at the NGX trading floor in Lagos.
And I'm Grace Egbara, it's the 24th of July. We thank you for joining us at this time on the show.
All right, let's tee off with news now. The Bank of Mauritius has raised its key interest rate by 25 basis points to 4.75%, citing rising inflation risks amid geopolitical tensions and the conflict in the Middle East. The central bank now expects average inflation of about 5.5% in 2026, up from its previous forecast of 3.6%, as higher energy, freight and food costs continue to put pressure on prices. The bank also revised its 2026 economic growth forecast down to 2.8% from 3.3% to 3.5%, reflecting higher fuel and electricity costs, weaker purchasing power, and an expected slowdown in tourism. Meanwhile, South Africa and Germany are strengthening bilateral ties with discussions focused on trade, investment, energy cooperation, and global partnerships. Ronald Lamola says the engagement reflects both countries' commitment to deepening economic cooperation and advancing shared development priorities. Let's listen.
For our relations with Germany will help us is to continue with our trade, but also trade diversification into the German market, but also into the European market, because Germany is one of the leading economies in the European Union. But it's also a very good platform for us for skills exchange. As I've said earlier on, that the German schooling system, which encourage vocational training, is something that remains very attractive to the South African government. And our president is very attracted to this idea. And we want to deepen that collaboration to the extent of even revolutionizing and reforming our own skills-based sector. So it's an important platform for us. The question of Sudan, South Africa, as you are aware, we're part of the AU Peace and Security Council. We remain seized with the matter at that level of the African Union. And there is a process that the African Union is undergoing to extend a hand to find a peaceful resolution to this conflict. It's indeed a difficult one with a lot of external players, which makes it very complicated. But for now, we call for a ceasefire and also for humanitarian access. As you have said, it is one of those very catastrophic conflicts with a huge, the highest level of humanitarian disaster that the world has ever experienced. So its resolution, and including the access to humanitarian aid, is very, very important.
In Morocco, Tangamed Port Authority has received its first long-term investment-grade credit ratings, with S&P Global Ratings assigning a BBB- rating and Moody's rating the port Baa3, both with stable outlooks. The ratings reflect Tangamed's position as Africa's largest container port, its strong financial performance, and its role as a major global shipping hub connecting more than 180 ports worldwide. Both rating agencies expect the Port Authority to increase borrowing to fund about 1.1 billion euros in expansion projects through 2028, while maintaining solid financial strength supported by long-term concession agreements and stable revenue streams. In other news, private credit is taking center stage at the Global Conference 2026 as investors assess its growing role in institutional finance. Fitch's Megan Neuroberger discusses opportunities and risks in private credit, including lending standards, credit discipline, and the evolving financing landscape. Here are excerpts.
I'll tell you a little bit about what we're seeing in our direct lend portfolio of ratings, which, there's a caveat that obviously we only see what we see from a private credit perspective. But the book of ratings is pretty large. So at any given time, it's like 300 to 350 issuers that we rate. And, characteristics of that group, first of all, it tends to be quite a low-rated group. I increasingly think of my portfolio as kind of bifurcated into three pieces. So we have our investment-grade corporates, we have our publicly financed, leveraged finance names, and then we have our private credit names. And if you kind of think of how credit quality has evolved, you have your high-yield bond space positioned relatively higher than BSL, and then private credit at the lower end of the rating scale. So at any given time, about half the issuers in that portfolio have an issuer level rating of B-, about 25% in the CCC bucket. Other characteristics of that group, as everyone in this room is probably quite familiar, direct lenders tend to avoid cyclical industries. So what we have in that portfolio is a lot of healthcare, a lot of business services, a lot of tech. Great in the face of macroeconomic headwinds, maybe not so great in the face of the disruption risk we're going to talk about, I know, in a little bit. And then rating trends in that portfolio. Again, if we look at the private part of our high yield coverage versus the publicly financed names, we have seen more deterioration in credit in the private part of the portfolio over the last, say, 12 to 18 months. So if we're just looking at, upgrade to downgrade ratios. And I think what we have seen EBITDA growth slow in that population of companies. I think a combination of, companies came off of Liberation Day with a lot of pricing power. Maybe that started to erode. Also a group that's really sensitive to higher rates. So we have less free cash flow generation and less capacity for deleveraging in that portfolio than we did 18 months ago.
Finally, on News Now for today, the Democratic Republic of Congo will enforce a law requiring mining companies to transfer 10% equity to Congolese nationals, with half of that stake reserved for company employees. Major mining companies, including Glencore and Ivanhoe Mines, have been formally notified to comply with the requirements or face regulatory sanctions. The government has also established a committee to finalize the implementing decree following consultations with industry representatives. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly after the break with Grace at the NGX trading floor, giving us our market rounds.
Retain the monetary policy rate at 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and non-TSA public sector deposits at 75%. The committee's decision to maintain the current policy stance followed a thorough assessment of the balance of risks. Although the headline inflation moderated marginally in June 2026, global uncertainties have heightened due mainly to the renewed hostilities in the Middle East. In view of the evolving developments, maintaining a cautious monetary policy stance remains appropriate.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for today's market updates. Hello there again, Grace.
Thank you, Melissa. Let's now take a look at how the markets wrapped up trading for the week, beginning with the equities. The NGX All-Share Index was down today by 0.20%, while the BRVM gained 0.16% to 482.43. The Nairobi Securities Exchange rose 0.32% to 233.47. In Southern Africa, the Johannesburg Stock Exchange advanced 0.69%, while Mauritius Semdex gained 0.29%. And in North Africa, Morocco's MASI edged up 0.19% as at 13:43 GMT. Finally, let's take a look at the energy commodities. Brent crude fell 2.90% to $97.77, while US WTI declined 2.43% to $89.95. Natural gas gained 0.86% to $2.94, and Arabic gasoline dropped 2.77% to $3.39 as at 13:25 GMT. And that's it on Money Moves Markets today. Back to you, Melissa.
Grace, thank you very much for those market reports. And that's it on today's edition of Money Moves. From all of us here at the NGX Trading Floor, we say thank you very much for watching and bye for now.